There are four major reasons why every month over 1,000 businesses choose our team to do their ERC, otherwise known as ERTC, refund. Overall, we charge less yet offer far greater value. Recently, the IRS added a second review if your stimulus refund is over $200,000. The effect of this is to delay your getting paid by about 1 year. We solved this problem by adding a hedge fund that pays you in 1 month instead of 1 year. That's reason number one. Reason number two, neither we nor the hedge fund charges you any fees up front, so you get to preserve your cash flow. Want to get up to 20% more ERC refund? Well, that's reason number three. Our CPA due diligence community vetted over a dozen CPA ERC firms a year ago, and we found one CPA firm that consistently was getting their clients up to 20% more. How? They use the most precise calculation possible, which is allocating for ERC and PPP by the hour per employee. Reason 4, when you factor in both inflation and the opportunity cost of not having your refund in 1 month, you have to add 15% to what our competition charges, or conversely, reduce what we charge by 15%. On the third slide, we will show you the grade 2 math that shows this and where you can download an explanation. The result is we are cheaper compared to over 90% of other ERC CPA firms. We offer IRS audit protection for the calculations in the work papers our CPAs create, naturally, because hedge funds require the highest standards. ERC refunds are a 100% paperwork process. Fact is, your refund is mailed into an IRS warehouse and sits for months in a mountain of other ERC paperwork from millions of businesses before anyone gets to it. With our hedge fund, that doesn't matter, since you're paid in 1 month. We published a free ebook for both business owners and referral agents that you can download from the ERC page of our website. The book is only 27 pages, but most download the 8-page executive summary since that answers most questions and takes less than 10 minutes to read. If you are new to ERC and were told you could not qualify because you received PPP, that's no longer true. You can get both PPP and ERC. If we don't charge any money up front to run your calculations, why wouldn't you kick the tires? ERC pays up to $26,000 per full-time employee and is capped at 499 full-time employees, but there is no limit on the number of part-time employees. ERC is available in all 50 states for all businesses and all business types. Arithmetic is taught in America in grade 2. Let's look at the 2 things you have to add. 5% for inflation and the minimum 10% opportunity cost for not having your ERC refund acting as working capital in your business. 5% plus 10% is 15%. As of July 2020, the IRS started paying 5% interest on ERC tax refunds that take longer than 45 days to process. Inflation is close to 10%. Subtract the 5% IRS interest, and you have 5% net inflation cost. That's the top value. Let's look at the bottom value, the 10%. When we asked business owners in today's economy if they put their ERC refund to work, what is the minimum they would expect as a ROI, and they said 10%. Add the two of them together, you get 15%. Hedge funds are extremely thorough in selecting an ERC CPA firm to handle their ERC work. Since this is how hedge funds manage their financial and IRS risk, they're paying against the paperwork and the calculations of a CPA firm. Paying the ERC client the correct amount is in both the interest of the hedge fund and the IRS when you have an audit. We consider this a seal of approval by the hedge fund of our CPA ERC firm. There are 2 easy ways to get a ballpark idea of your ERC refund in less than 5 minutes, all on your own. The preferred method, number 1, is to download our 1-page ERC fact finder and do the simple calculations. Email it to us at our email address and phone number, which is at the top of every page of the CPADueDiligence.com website. At the bottom of the form is where you put your contact information and whomever referred you to us. Number 2, on the right, is an online calculator which can get you a ballpark result in about 2 minutes, and you can copy and paste the report that calculator generates in your email. This is totally anonymous since we do not ask for your email or your name. If you would prefer to talk to someone, we have an online ERC form on our website, and you can provide your contact information. We will get back to you at the time you specified. If you optionally answer the questions that are on this online form, we can be much more specific about your situation on that first call, and that speeds up the process. Number 2 is a 2-page PDF showing the pros and cons of the top 3 ways to both get paid and the top 3 ways to pay your professional ERC fees. You'll objectively conclude that, as always, we offer the best of both. There's both a client and a referral agent version of this 2-page PDF. The green arrow points to 4 burgundy-colored buttons on the ERC website page. Click on any one of them and you will be able to download the 2 PDFs from the previous slide, or the 2 PDFs on this slide, or the Excel spreadsheet on the next slide. Once we talk, we'll email you a 1-page Microsoft Excel or Apple Numbers spreadsheet that you will need to complete. If you do not have either Excel or Numbers, we can email you a cloud-based Google spreadsheet. The spreadsheet has 4 sections as shown. We need to know what your gross receipts were for each of the quarters of 2019, 2020, and 2021. And you will enter that into the yellow area that you see, and it will immediately tell you which quarters you qualified for ERC refunds. If you get this spreadsheet completed before we talk on our first meeting, it will be much more productive and really speed things along. Once this form is complete, we will have a pretty accurate idea of how much we can get you in ERC 1 month after we receive the rest of your paperwork. The Congressional Budget Office estimates that the U.S. government will pay about $86 billion in ERC. We created the most generous referral program in the ERC industry, and you can even override the referral agents you introduce to us. Our ERC professional fees are fixed, and paying you and your agents a referral fee does not change what the client pays. So if we're going to pay somebody, why not you? Many clients become referral agents when they understand the scope of what we offer. After you contract with us, we will create a referral agent PDF like this, one that you see, and there are many links on it to various resources that we've shown you, and we will personalize it with your contact information. CPA Due Diligence is a decades-old community of CPAs, attorneys, and industry experts that vet cost and tax-saving solutions for our clients. We've been offering CPE credits to CPAs for over 25 years. Working together in the vetting process, we save a lot of time to help our clients. The 3 most popular solutions on our website are: 1. Inflation relief. You can improve your cash flow and reduce business income taxes by the cumulative effects of 6 years of inflation while mitigating risk. If inflation stays at 8%, you're looking at a 50% reduction in taxes, and you don't pay them for 6 years. TWA, number 2. If you could have a tax-free income measured in millions of dollars with no net out-of-pocket costs and 100% paid for by 5 years of income tax deferral and inflation, would you be interested? This is far superior to premium financing. Both this solution and the previous one both require your business have a minimum net profit of $1 million to qualify. Finally, number 3, 401k exodus. The U.S. Supreme Court has ruled in both 2018 and 2020 that business owners have a fiduciary liability in a traditional 401k plan. The annual Bible for class action lawsuits is published by a 700-person law firm we work with. It states a class action lawsuit can easily bankrupt a business. In California, attorneys can go back 5 years and only need a handful of disgruntled employees to launch a class action lawsuit on a 401k. The California Department of Labor can issue a fine of $500 per month per employee if you do not offer a voluntary retirement plan to your employees. So if you have 100 employees and you don't have this, you owe over $700,000 now to the Department of Labor. The solution to number 3 is get rid of all your costs and all the fiduciary liability of a 401k by graduating to a non-ERISA retirement plan. Employees are also far better off.